spot gold, which is just a lie anyway, but spot gold is frankly nearing 5,000. Remember, all of these had the same face value, $20. Now you tell me, is it because gold is worth that much more or that the dollar is worth that much less? And I will point out to you, one place, the financial system, one place, the financial system. This is not a conclusive list. 33 places, 33 entities use gold. Ratio gold silver price action will grow wider and then it'll grow lower, which is where I think we are right now. And then as the hyperinflation kicks into gear, it goes huge again. And when I pulled the chart, which anybody can do, it's free, longtermtrends.com, you can pull the gold silver ratio pretty easily and you can see where they got the 15-1. And you can also see when that pattern shifted in 1913 or 14, where it went to a 20th of an ounce of gold. This is a $1 gold coin to 1 ounce of silver, that 20-1 ratio.
According to sound money advocate Lynette Zang, rising gold prices signal failing fiat currencies. Governments encouraged cryptocurrency adoption by allowing prices to surge, diverting attention from gold and silver as true stores of value, with its fundamental value far exceeding current market level. With limited supplies of gold and silver and growing global demand, supply-demand imbalances continue to intensify. As monetary systems evolve, precious metals stand as enduring hedges against currency debasement and systemic financial instability. Now, we present the clips from Lynette Zang interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
You can pull the gold silver ratio pretty easily and you can see where they got the 15-1. And you can also see when that pattern shifted in 1913 or 14, where it went to a 20th of an ounce of gold. This is a $1 gold coin to 1 ounce of silver, that 20-1 ratio. Okay. So, and you have different things for different functions, but you can see it go down, then you see it go up. It actually broke above the highest, according to the long-term trends, was 121-1.
Okay.
Now, when I checked it yesterday, it was at like 54 and change to 1. There is a support level on the bottom at 50. So what I'm looking for is it going to bounce off of that? Is it going to break through that? If it breaks through that then becomes the new resistance level on the top. And the next level of support that I see is at like 40-1. If it breaks through that, if I recall this accurately, I don't think I see any more resistance until we get down into those lower levels, maybe 20-1 or what have you. However, on the flip side of that, if it fails to break through that bottom support level, we have broken above the all-time high to go to that 121. So what I think is going to happen, which would be historically accurate, is we could test it. We could even go lower, but especially with inflation rearing its ugly head again in a very vocal way, means high noticeable price increases because of the inflation that they call growth. Okay. It's really inflation. Most of it. I don't buy it for the ratio. And if you are heavyweight, if you go in and you say, okay, and you had this experience, so please correct me if I'm wrong, but I built this, so I'm pretty confident in it, we did an assessment of what your day-to-day living looks like. And we have it broken out. Okay, so what do you want? You want silver for that function, or do you want gold, barterable gold for that function? In this case, we're talking about barterability, right? And if it's property taxes, you want gold. Mm-hmm. If it's buying a tank of gas, you want silver. So again, if you are sitting on a tremendous amount of silver, we also take a look at, you already paid the fees to buy that silver. Does it make sense to swap that out? It might not. It kind of depends, but you can pay your property taxes with silver. It's just going to take a lot more and a lot more space. But if you already have it, we're not about churning your account. This is about making sure that whatever it is that you do actually supports exactly what it is that you're trying to accomplish. And so I believe strongly that I don't really care what the ratio is because I'm not going to trade my silver. I have enough silver for myself and both of my children for 10 years. I think that's enough, right? But if I were to actually weigh the number of ounces of silver to the number of ounces of gold, even in collectible form, I have way more gold. And the reason why I have way more gold is because of my personal goals, which is to take advantage of what's happening. I can't change it, right? I can't stop the rest of the erosion of the dollar. We need a big crisis. It needs to end. I'm trying to have a global impact on sound money by getting redeemable gold back in the system again. It's why I travel as much as I do talking about this, because there's 1% that's ruling us. If we can get 3% of the global population to really quiet revolution, just buy gold and silver. Now we can have a voice in this next system. And if it's redeemable, and what that means, just like this, right? When we had these gold certificates, if I did not like what I saw my government doing, I could walk into the bank with this and pull the gold out of the financial system. This is why gold forces fiscal responsibility. Debt, you don't have that same. They can create as much debt as they want. And there really are no limitations to how much debt they can and frankly have created.
Growing volatility in cryptocurrencies and precious metal signals weakening central bank control over global monetary systems. Rising gold prices historically indicate failing fiat currencies by allowing rapid price appreciation and branding it as digital gold. Meanwhile, physical gold and silver shortages have emerged despite sharp moves in spot silver prices. With debt levels surging and paper contracts multiplying infinitely, physical gold and silver continue to expose cracks in the financial system. Let's get back to the interview.
I could pull up the silver chart and tell you, I could tell you absolutely. Both spot, this is the other thing. When you're referring to Wall Street's gold and silver, it's really a spot contract. Okay. And this is like huge. If you are I suggest you call us and let us calculate out how much silver do you need? How much gold do you need? And then you make the switch. There's no, as long as you're comfortable with it, because you got to do whatever it is that you're comfortable with. And we talked about the raw versus the slab.
Yep.
So I think that would be a great place to go inside of this, because I too run a company and I need to make sure that no matter what happens, I can cover my salaries, things like that. For me, that's ounces of gold. Now, this is a pre-33. The date is 1879 on this 1 ounce coin. Well, not quite, but pretty close. And this is a new piece of bullion. So, these run the same way that the bullion runs, because they're going to be influenced by the spot market at this point in time. But that's the piece that's shifting. And what's particularly exciting for me in here is that the shift that started to the digital, the spot markets dictating the price action, or price discovery, I should say, we're now converting to the physical supply demand dynamics that are starting to take over. And that's why I brought up how many different entities use gold and how many different entities use silver, which I have to count, which is not a big deal, but there's more that use this than use this. However, 33 entities or more, because maybe I don't think my list is necessarily conclusive, use gold, probably some digital gold like Kinesis or Glint, where you have a card that you can use. So that's your short-term kind of liquidity, just boom, 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 maybe even some gold backs. this is a $1 gold back, and it has a thousandth of an ounce of gold embedded in this. And remember, gold is indestructible. So in whatever form, they can pull it out.
We've burned them. Those things are indestructible and the gold's there. So we've tested it.
There you go.
Yeah.
Yep. There you go. And so with a level of fractional, so less than an ounce, pieces, and then this is the other thing that I want everybody to understand really clearly, and I know you talk about this, but gold and silver in any form is monetary at its base.
Yep.
So a lot of times people say, well, I can't afford it. I can't afford it. You know, I mean, look, it's not as easy to do anymore, but this is a whole bunch of sterling silver that I bought at yard sales, at estate sales, some secondhand shops, you know, so anything that's marked sterling or 925 is 92.5% pure. So there are all different ways that you can accumulate, even if you have a very, very small budget.
Yep.
Though, going back to the community piece, keeping in mind that skill sets are barterable, right?
Rising gold and silver prices challenge the long-held dominance of Wall Street, bullion banks, and fiat currencies. Despite the ability to create unlimited paper contracts, demand for physical gold and silver continues to grow because their unique properties cannot be replicated in laboratories. Used across energy, technology, infrastructure, and manufacturing, cryptocurrencies, and dollar-based assets, gold and silver stand above governments as true sound money. With the gold-silver ratio tightening and systemic risk increasing, physical precious metals offer enduring value in a transitioning global monetary system. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.